Gold, gold, gold. It sure is nice to look at, but is it any good as an investment? Well, keep watching, sunshine, because you're about to find out. Good day to you, folks. Money Jim here, your money pal. When it comes to track records, nothing comes close to gold. Crypto, not even been around 20 years. Stocks, about 400 years. Government bonds, over 900 years. But gold, well now, folks been buying and selling that shiny yellow metal for thousands of years. And they still at it, yes sirree. And 'cause gold's reached all-time highs, it's attracted plenty of attention, that's for sure. In 2024, gold went up about 27%, which was more than the S&P 500. But what about over the long run? Well, it depends how far back you look. See, I could tell you gold's averaged about 7% a year over the last 15 years, or more than 10% a year over the last 25, or less than 5% on average over the last 45 years, and it'd all be true. See, you can prove whatever you want, depending on how you show them numbers. Anyway, point is, gold's price been all over the joint, from a whopping 133% gain one year to a wily 32% drop in another. Putting all those years together though, here's how gold's done over the last 10 years, with the S&P 500 there in red for comparison. Here's 15 years, 20, and 25. So overall, it looks like gold's done pretty darn good, even better than US stocks if you go back long enough. Before you go hitting that buy button, take a look here between fall 2011 and winter 2023. In that 11 and a half years, the gold price went up a grand total of zero. Zilch. You heard that right. You didn't earn nothing from gold over 11 and a half years. In fact, you probably lost money because of the investing or storage costs. And for comparison, the S&P 500 more than tripled your money in that time. Now you might say I'm cherry picking here, and you'd be right. But it's important you get the full picture. Don't get me wrong, sunshine. I ain't saying what happened then is gonna happen again anytime soon. But there's always a chance something like that could happen again. So if you're thinking about investing in gold, just you realize it could get real uncomfortable for a real long time. Gold ain't a one-way street, no sirree. There might be times you'd wished you hadn't touched it with a 10-foot stick. And here's another thing about gold. There ain't nothing to research directly, like a company. It don't pay you nothing, no income, no dividends. That's why Warren Buffett don't like gold one bit. It just goes up and down based on how much people buying and selling. And that makes it one tricky thing to predict. Because it's real hard to know how people thinking and feeling about gold. And that's why it's been a real wild ride at times. Because thoughts and feelings can change faster than you can say fiddlesticks. Now, demand for gold at the time of this video's never been higher, which is why the gold price keeps hitting all-time highs as well. But who's doing all that buying? Well, according to the fancy-sounding World Gold Council, over 40%'s gone into jewelry. About a quarter's gone to investors, and a bit over 20%'s been bought up by central banks. And you know which one snapped up the most in 2024? Nope, not the US, but the National Bank of Poland. Now you might think gold can be so volatile and sometimes done better than stocks that it's best for higher risk investors. It certainly can be high risk, but gold actually attracts a lot of cautious investors. See, oftentimes gold is used to provide some sort of protection to your wealth. That's why some call it a safe haven investment. Here's 3 reasons for that. 1. Most times, gold's gone up more than inflation has, so it protects your money against inflation. That means you can still afford to buy stuff in the future. A store of wealth, as some folks put it. 2. Gold tends to do good when things are looking bad, like a recession coming or a war breaking out somewhere. 3. Oftentimes gold goes zig when stocks are going zag, so it can offset some of those nasty stock market drops. Look here in 2008, during the great financial crisis. Boy, that one hurt, but gold kept its head above water. Or more recently, in 2022, when inflation started taking off and folks thought recession might be coming. Again, gold didn't go down like stocks did. Or going back to 2000 to 2002, when the dot-com crash sent stocks falling 3 years in a row. That one hurt for a long time, but gold gave you decent enough returns. It don't always work out like that. No investment guarantees here, sunshine. But as you saw, plenty times, gold helped ease the pain when investors got scared and markets dropped. Whether you a high risk or low risk investor or anything in between, if you want to invest in gold, how'd you actually do it? Well, the simplest, cheapest way is by investing in a gold ETF or exchange traded fund. You might see this called an ETC or exchange traded commodity. Either way, you don't actually own no gold, but your investment will do what the gold price does. So y'all benefit all the same if that gold price goes up. You could also buy physical gold like bars and coins. Now this might seem nice and all, but you gotta keep it somewhere, like a vault. Hope it don't get stolen by no varmints. And you probably want to get it insured, so it's an expensive option. And don't forget, those costs eat into your returns. Some folks might want to invest in gold mining stocks, but although they can do well when the gold price is high, or when them companies find a whole lot of gold, you gotta research the company, and their stock prices can be even wilder. So tread with caution there, sunshine. There's also gold futures and options, but they're best left to the pros because they're more complicated and can go real wrong if you don't know what you're doing. But if you want to invest in the yellow metal, how much of your money should you invest? Well, I can't say what's right for you because no one really knows what's going to happen with gold. It might be smart to limit how much you invest in it. You sure be brave putting more than 10% of your money into gold. So there you have it, sunshine. Gold might not be the best way to get rich after all. In fact, it might not get you rich at all. But it could be a good way to add something different to your mix of investments. Or offer some protection when things ain't looking too good. If you think about investing in gold just because of how much it's been going up lately, or you've been watching too many Robert Kiyosaki videos, what happens if gold starts going down? You gonna sell it? Then what? Like with any investment, understand how it behaves, know why you own it, stick with it for the long haul, and make sure you invest in plenty other stuff too.